There's a real chance that you're getting some bad information about what's going on with interest rates right now. This is your host, Ron Wysakarski, for the Black Hole of Real Estate. And it is true that on the 28th and 29th of April, the Fed is going to meet. And it's the last time that Jerome Powell is going to be the Fed chair. And there's a real suspicion that rates are just going to be the same or possibly go up, but not down. And I think we're looking at the wrong things at this point if we're expecting the Fed to direct all the policy that affects mortgage interest rates. And here's what I mean by that. The Fed has not dropped rates for a while right now. And you would think that that would be bad for interest rates. Well, the fact is, a month or so ago, rates went from 6%, 6.01 to 6.5. But the last 3 weeks in a row, rates have come down. And at the end of the week, right before the Fed meeting, rates were 6.23%. So 6 up to 6.5, under 6.25. And my suspicion is that as we're through tax season and things are normalizing and whatever we're going on right now, I think rates are going to float down on their own, regardless of what the Fed does. Now, I do believe that we will see rates coming down when the new Fed chair takes over. But in the interim, it doesn't mean that rates have to stay exactly where they are because there's market occurrences and market pressures and things that are happening in bond markets and in the stock markets and just in the economy in general. They could cause those rates to go up or down because a bank could choose to raise or lower a rate to either encourage business or make more profits. And a lot of times a bank will increase the interest rate if they're overloaded with loans and they don't have the capacity to close them all. And by the same token, if they're a little underweight on the number of loans they like to have out there and are overstaffed to process the few that they have, well, they could put interest rates on sale and lower that. And I think what we're seeing right now is that the rates, they did spike. And, the government shutdown, the war, all those things, we keep hearing about it, we're knowing about it, but I think we're almost normalized that right now. It's like we're used to it after 60 days or so of the government being shut down and more, coming into our second month of the Iran thing. I think people are just rolling into daily life right now. And I'm not saying that's right or wrong. I'm just saying that's what's going on. My suspicion is you're going to see interest rates coming down gradually each week until there's movement at the Fed, which will be a more dramatic move in the rates. And it wouldn't shock me at all to see rates in June in a 6% raise. And when you look towards the August-September timeline, we could very well be seeing rates in the 5.75 range, maybe even 5.5. If the Fed gets super aggressive on dropping rates as a way in their mind, if it's in their vision, to get the economy going. And they're not worried about inflation. These are real possibilities. Now, the Fed is going to say that they're independent of the president, and that's probably the way it should be. But my suspicion is this Fed chair is going to come in really focused on doing something a little bit different than the Fed has done in the past, even though they're doing it independently. Wink, wink, rates are coming down. And I think most people sense it and feel it and think it. And sometimes that's just enough to move the needle on these things. So watch next week, see what the Fed does. My prediction, they don't do anything. They just keep rates right where they are. They have a nice little ending to Jerome Powell's tenure, and then they move on to the next Fed chair, and I think that's when things get moving. But in the meantime, I think rates are going to keep coming down, and that's what you should be paying attention to. If you got questions, definitely put them below. Drop us a line. Definitely subscribe. This is Ron Wysakarski for the Black Hole of Real Estate.